Hey, good day, everybody. Jeffrey Beamer here, Senior Investment Strategist with ElliottWave.com. And we are in the midst of earnings season, and we talk about earnings on a regular basis. And there's two things that we do with earnings. We look for stocks that are going to break out, and we look for stocks that are going to consolidate. And hot off the presses, we just sent this alert out for a stock that we thought would consolidate and not move much through earnings. And it did just that. So let's talk about it. This will be trade ID 1118. This is on Home Depot. This is in our service Delta Neutral Income service. This is where we look to just generate regular occurring income. All right. And with this stock, we entered this on May 9th. All right. And the way this broke down is we used an iron condor to capture premium going into earnings. All right. And the purpose of this is because we don't think the stock is going to move very much. This is an established company, and just through earnings, it's been around a long time. There's not much that will move the needle for a company like Home Depot. Now, as you can see from the chart on the left, it does kind of move up and down quite a bit, but we are looking for a very short-term trade, and specifically through the earnings event. All right, so what we did was we're looking at selling premium. So if you look here in the middle in the red, we have our sell legs. Okay, so the May 367 half call and the May 17th 325 put. We're selling a strangle there. All right, if you just did that by itself, that is a naked strangle. All right, now we don't want to be naked. We want to hedge our position. So what we'll do is buy further out legs. Those are called the wings. And in this case, it was the 370 strike call that we purchased, and we also purchased the 322 half put. Okay, that was to reduce the margin requirement, to reduce our risk, and it actually allowed us to do a couple of contracts instead of just one. So you can see here our entry was at 66 cents. Now that is times two, so that was an entry credit then of $1.32. All right. And we were looking for the stock to consolidate through earnings. All right. So let's fast forward. The exit just occurred today here on the 15th. That was 5 days in the trade. Let's see what happened here. The stock had earnings. As we pull this up, you can see the earnings event. The stock actually gapped down, stayed within the range of our break evens of our trade. Okay. We expect a little bit of stock movement, a little bit of volatility. All right. And then it rallied through the day, and we waited an additional day for today. And look where it is. It's right in the middle, trading right in the middle of our iron condor. And for all practical purposes, we could allow this to expire worthless on Friday. Expiration is just 2 days away. Okay. But when we have almost our maximum possible reward in the trade of that 132, I'm willing to give up $4 or $5 to exit the trade and generate that winner. Okay, there's no need in waiting for a couple of extra days just to pick up a few pennies, because the stock could move. Something dramatic could happen that the stock could move, and we just don't want that to happen. So we took that off today. You can see here it was a nice profit. And what we ended up with here, as you can see, was a 35% return on capital. That's return on risk. All right, in just 5 days. And the bottom line is, if you did it at a limit order at say you put in that $4 to exit the trade, that would have taken your profit down to $128 instead of $132. And that is based upon a hypothetical $10,000 account. That is a 1.28% return on portfolio in just 5 days. All right. So we are looking at that for consistency. And that is your pro tip, trader, for today. Look for these stocks that are quiet through earnings, generate income generate income with trades that will allow you to do this sort of thing through the earnings event. So that's it for today. Everyone have a great trading week. We'll talk to you again soon. Take care.